We showed you Bed Bath & Beyond there before the break. Its stock is up after hours about 8%. But keep in mind, the majority of their fiscal quarter ended before the full shutdown, and the majority of their stores are closed. So I'm not sure what data the machines are looking at there. But either way, there's Bed Bath & Beyond. Let's talk instead about Target, because most of their stores remain open. Hardworking men and women, especially on the grocery side of Target stores, they're working to make sure that we can shop. The stock down a little bit today, but BMO upgrading that stock to an outperform at BMO Capital Markets. And Karen, I imagine that you've got to love that upgrade. As hard hit as some of these names have been, at least there are analysts out there that are saying things will get better.
Yeah, I mean, I agree with it. I'm long the stock. I think that things already have sort of gotten better in some ways for the Targets, the Costcos, the Walmarts of the world, because I think they've actually pulled future sales into the past couple of months. But I think that Target will survive and prove themselves to be a great operator. You know, buy online, pick up in store. They have that capability. And so I think that even if the world goes back to somewhat quasi-normal, that they will have picked up additional business that they're likely to keep. And the stock's not crazy expensive. So I like it right here.
Yeah, likes that as well. I mean, Tim, you had Costco, I believe it was, raise their dividend. Jim Cramer this morning saying, if you cut your dividend, I'm selling you. If you raise your dividend, I'm buying you. Costco, one of 4 retail stocks up this year. Do you like Target? Do you like Costco? Do you like somebody else out there in the retail world?
I love Jim's calls. I will say I think cutting dividends for a lot of companies here is actually really prudent.
All right, Guy Adami, same question to you. Costco, Target, somebody else out there that you think will not only be a survivor, but is investable and will be profitable and a moneymaker for our viewers over the next couple of quarters, months, and years?
Yeah, I think Target is the call. I mean, we talk about this. I'm sure Karen will agree. If you like Walmart at close to 25 times next year's numbers with similar EPS growth, you got to like Target at 16.5, 17. Not that suggests that Target should have the same multiple, but you got to sort of, I think that distance has to be somewhat narrowed, and maybe it's a function of, Target's multiple increasing and Walmart's coming down. But I don't think a $125 price target for Target is out of the question. So, given the choices you just gave me, I think Target absolutely is a play here.
Dan?
Yeah, I would just say that if you're bullish here on the market, and it's predicated on the fact that you think the economy is going to reopen sooner than most think, then you can't be bullish on grocery stores going forward. I think it was David Rosenberg tweeted out earlier today that in the month of March, Americans added more food and drink to their pantries than they've added in March, just alone, than the last 9 years combined. So when you think about pent-up demand for the sorts of things that people want to do once we reopen, and that's go out and eat in restaurants and that sort of thing, well, that's not great for consumption, in my opinion, because you're going to have to work off a lot of that inventory that are going to be in households that they've been hoarding. So I think there's a lot of fits and starts here, Sully. It goes back to your tweet that I didn't retweet about data. I think you have to consume as much of it as possible here, and there's little things in the cracks that are going to make a lot of sense, because we may find ourselves in July and August looking back and say, oh, there wasn't the pent-up demand that we expected when we were saying, oh, the stock market at 2,800 is a great buy here because of it.
Well, if we, Dan, agreed on everything, then I might start to worry about my own viewpoint. But let's, and I kid with love and jest. I want to ask you very quickly before we move on about Macy's. And I'm not trying to pile on here with Macy's, okay? A lot of good people work there, stores across the country. It's got a $1.6 billion market cap, Dan. There was a time where, maybe it's still true, the Herald Square building, one building, was valued at $2 billion. One building, $2 billion. Now the company's market cap is $1.6 billion. What happens here to Macy's ultimately?
Well, I mean, listen, unfortunately, this is a trend that's been going on for years, is that we've been overstored in America, and department stores just don't make a lot of sense. They didn't make a lot of sense pre-coronavirus. They probably don't make a lot of sense going forward. I suspect Macy's has some assets that we probably are not reflected in their market cap. and the sum of the parts is worth more, the brand is certainly worth more. I suspect you see it as part of an omnichannel strategy with someone, I don't know, maybe it's Amazon. They use the real estate for logistics and storage and all that sort of stuff. They use the brand as an online store, but a lot of these department stores are not going to be around in 5 to 10 years.
Karen, what are your thoughts?
Brian,
I'm not trying to pile on Macy's. They're just perhaps the biggest, most well-known.
Right. Right. I mean, the debt's been telling you that things are in trouble, not going well there, and they did hire Lazard to help them think about restructuring, which doesn't necessarily mean bankruptcy. But, I mean, the department store space is clearly so troubled. And one, it's just worth noting, JCPenney, even though it's really small now, announced today that they would not make a debt payment. And if you look at their bonds, these are bonds that are due June 1st of this year. They were already trading terribly, but if you look at that absolute just it fell off a cliff today. They thought they would have more time, that they would probably get a June payment, and now it's just trading like, all right, they're going to file for bankruptcy, and what do we as unsecured debt holders, what value are we really going to have? So that was sort of in very slow motion, but today was sort of the death knell, I think, for JCPenney, which is sad.
Yeah, I mean, we often forget there's a lot of people behind those numbers there. Amazing. The one thing, I'll put that in context before we go to break. Macy's market cap of $1.6 billion. Not only was it kicked out of the S&P 500, put in the small caps, it would make it one of the smallest mid-cap stocks in the world. I mean, truly a remarkable, sad story there for Macy's.